Imagine money is like water. For most, it's a river flowing before them, from which they can only take what they can reach. For a select few, like true millionaires, money is like a system of dams, canals, and turbines designed to ensure that the river never stops flowing in their favor. It's not luck, it's not magic, it's strategy. Today, we're going to explore 10 master moves that transform your relationship with money and can make the difference between working your whole life for it or making it work for you. Take a deep breath, because what's coming isn't empty motivation, but knowledge that translates into power. Write in the comments, "I am prosperous and I attract wealth," and let this message begin to resonate in your life today. Strategy 1. View debt as working capital. For most people, borrowing money is a sign of weakness, almost a silent cry that something is wrong. But for those who play in the highest leagues of finance, debt is not a burden, but a strategic weapon. It is not borrowed because it is lacking. It is borrowed because equity is too valuable to be spent all at once. Richard Branson put it bluntly and lucidly. Equity is the lifeblood of the company. Never use all your lifeblood in one fell swoop. The difference lies in the mindset. An average entrepreneur thinks, "If I have money, I use it for the project." A millionaire thinks, "If I have money, I keep it producing and use other people's money to expand." In the 1980s, when Branson was looking to expand Virgin Atlantic, he didn't put his entire equity on the table. Instead, he took out loans secured against smaller assets, non-core properties, equipment, and even future contracts. This allowed him to invest in airplanes, routes, and marketing without touching the heart of his capital. This principle is key. If you invest 100% of your own capital in a project, everything is tied to a single risk. But if you finance 70% with well-negotiated debt, you can use the remaining 30% to invest in other businesses or assets. The wealthy understand that debt, when used with foresight and not urgency, is like the wind in the sails of a ship. It accelerates the journey, not sinks it. The key is knowing how to gauge the direction and strength of that wind. Strategy 2. Use assets as a key to open doors. Money is never simply requested. There is always something to put on the table. In the financial world, your assets are more than possessions. They are keys that open doors. Millionaires use stocks, properties, corporate bonds, and even patents as collateral to obtain loans with lower interest rates and more flexible terms. This is the difference between borrowing money as a risk for the lender and borrowing it as an opportunity for them. A monumental example is Jeff Bezos. During several critical stages of Amazon's growth, especially between 2000 and 2010, Bezos didn't sell stock to finance key expansions. Instead, he used debt backed by the company's ever-increasing valuation. This allowed him to open new fulfillment centers, invest in Amazon Web Services, and launch services like Prime, all without diluting his equity stake. Why is this so important? Because selling a stake can cost you more than paying interest. If you sell 10% of your company worth $1 million today, you receive $100,000. But if that company ever grows to be worth $100 million, that 10% you gave up today will have cost you $10 million in future value. The strategic use of assets as collateral not only protects control, but also multiplies returns. It's like mortgaging a house to build a building that generates income. You don't lose the house, and on top of that, you gain a much larger income stream. Write in the comments, "I am prosperous and happiness in my life." Because like an asset that supports a great project, your strong beliefs can support your greatest achievements in life. Strategy 3. Don't live off your salary, but off leverage. Most people live off a single economic engine, a fixed salary. This income, although stable, is limited and dependent on personal time and effort. Millionaires, on the other hand, understand that true financial power lies not in working for money, but in making money and assets work for them. One of their smartest moves is to convert assets into liquidity without selling them. How do they do this? Through loans backed by their investments, stocks, bonds, index funds, or even cryptocurrencies. For example, instead of selling stocks valued at $1 million and paying up to 20% or 30% in capital gains taxes, a high net worth investor can take out a loan with an interest rate of 3% to 5% per year, using those same shares as collateral. This way, 1. They retain ownership of the asset and continue to benefit from its appreciation. 2. They avoid the tax burden that selling would entail. 3. Obtain immediate cash to invest, expand businesses, or even for personal expenses. This is a move that not only preserves seed capital, but also keeps it constantly growing. It's like having a goose that lays golden eggs. You don't sell it for quick cash. You keep feeding it, and each egg is a stream of cash that you can use strategically. Strategy 4. Real estate, an army that pays for itself. For many people, buying a home is the end of their financial career. A home to live in, a mortgage to pay, and after 20 or 30 years, the satisfaction of ownership. But for the wealthy, a property is just the first soldier in a much larger army. They view real estate as productive units that generate income from day one. The key is to acquire properties that pay off their debt and still leave a monthly profit margin. Practical example. You acquire a 10-apartment building with 20-year financing. Each apartment rents for $800 a month. The total income is $8,000 per month. After paying the mortgage, taxes, insurance, and maintenance, there is a net cash flow of $2,000 per month. This cash flow, far from being an expense, is reinvested in new acquisitions. And when the debt is extinguished, passive income soars. This is how big investors accumulate dozens or hundreds of properties, reinvesting profits and using debt as a lever for growth. Think about this. A person with an average job could save for 10 years to buy a house with cash. A smart investor could acquire several financed properties in that same time that, thanks to tenants, pay for themselves and generate profits. Now say, I accept success, money, and happiness in my life. Because just like a good property, your decisions today can sustain and multiply your freedom tomorrow. Strategy 5. Separate personal and business risk. One of the most costly mistakes a novice entrepreneur makes is mixing their personal finances with those of the business. It's like sailing a ship and tying your lifeboat to the hull. If the ship sinks, everything goes down with it. Millionaires understand that the key to protecting their assets isn't just earning more, but also protecting what they already have. This means structuring each project so that, if things go wrong, the impact is limited to that project and doesn't spill over into their personal life. A clear example is when an entrepreneur buys a company using debt backed exclusively by the company's assets. If the business fails, the loss is restricted to that investment. Machinery, inventory, intellectual property, but it doesn't affect their home, family savings, or personal investments. This strategy isn't just for large corporations. A small entrepreneur starting a restaurant, an online store, or a service center can also apply this principle by creating a separate legal structure, for example, a limited liability company, and maintaining completely separate accounts, contracts, and debts. In the financial world, this is called risk management. In real life, it translates to sleeping soundly, knowing that a business stumble won't ruin decades of personal work. Repeat after me. I own my financial future, because every smart step you take today can open doors you might not even know exist otherwise. Strategy 7. Turn inflation into an ally. For most people, inflation is a silent enemy that erodes their purchasing power year after year. But for those who understand the language of money, it can become a strategic ally. Imagine that today you purchase a property with a 30-year fixed mortgage of $200,000 at a rate of 4%. Your monthly payments won't change, but the world around you will. If annual inflation is 5%, in 10 years, the real value of those payments will be significantly lower because the money you'll use to pay them will be worth less, while your income and the value of your assets will likely have grown. It's as if time is paying off part of your debt for you. For example, a monthly payment of $1,000 today could, adjusted for inflation, be equivalent to only $600 in real terms a decade from now. And meanwhile, the value of your property could have doubled, not only protecting you, but enriching you. The trick is to maintain fixed-rate debt in assets that appreciate over time. Real estate, solid businesses, strategic investments. That way, inflation works for you, not against you. Strategy 8. Leverage to multiply, not to survive. Leverage is like fire. It can light your path or burn everything down. Debt, when used to plug financial gaps or pay for unproductive expenses, becomes a trap that consumes the future. But when used to multiply capital, it can accelerate your growth exponentially. Millionaires have a clear rule: never borrow money unless it's intended to generate a return greater than its cost. If the interest on a loan is 5% per year and the investment projects a return of 12%, leverage makes sense. Every dollar borrowed generates more than it costs. But if the estimated return is less than the interest, the loan ceases to be a stepping stone and becomes a dead weight. Let's think about simple numbers. A $100,000 loan at 5% annual interest equals a cost of $5,000. An investment with a 12% return equals a profit of $12,000. The result would be a net profit of $7,000 thanks to leverage. This principle explains why some entrepreneurs manage to expand quickly while others drown in debt. The difference isn't the amount, but the purpose. Say, I am prosperous and I attract wealth, because abundance isn't a matter of luck, but of calculated decisions that multiply and protect your assets. Strategy 9. Diversify using debt as a leverage. True millionaires know that diversification is the most powerful shield against uncertainty. But they don't always diversify with their own capital. Often, they do so using strategic debt, designed to open several doors at the same time. Imagine an investor obtains a $2 million line of credit at 5% per year. Instead of putting everything into a single business, divide that money into 4 fronts. $500,000 in technology, investing in a startup projected to grow 25% annually. $500,000 in renewable energy, where long-term contracts ensure stable returns of 12%. $500,000 in commercial real estate, with rents generating 9% annually. $500,000 in private equity, participating in a business that distributes profits every quarter. Each of these engines operates independently. If the tech sector suffers a recession, real estate and renewable energy continue to generate cash flow. If private capital takes time to bear fruit, technology and income sustain the advance. Here, debt isn't the goal, it's the fuel that powers several engines at once. And like all good fuel, it must be used precisely. Too much, and the system explodes. Too little, and movement is slow. Those who are good fuel know how to use it precisely. Strategy 10. Maintain mental and emotional control. Above any calculation, graph, or projection, there is one asset that differentiates the millionaire from the rest: their mind. Their mind. Those who allow themselves to be dominated by fear in the face of debt lose the game before they even begin. Those who see only cold numbers and threats will never be able to turn a liability into a bridge to growth. The rich think differently. They don't see obligations, they see leverage. They don't panic, they sense strategy. They don't drown in numbers, they shape them. For example, when a company's books show a debt of $10 million, the experienced entrepreneur doesn't ask themselves, how do I pay this off? But rather, how do I make this debt pay for itself in 5 years? And from that question arise interest renegotiations, sales of non-core assets, or new sources of income that turn what seemed like dead weight into a dynamic asset. This isn't naivete, it's emotional discipline backed by data. They know that a graph that looks red today, with the right strategy, can turn black in the next quarter. They know that the financial game is not won with impulsive reactions, but with calm and calculation. They comment, I accept success and happiness in my life. Because before conquering any market, you must conquer your mind. In all these strategies, there is a common thread. Money never stands still. It is never confused with the person who handles it, and it is always used with a clear purpose. Millionaires don't think in terms of just making money, but rather about building a system where money, time, and opportunity work together. You can start playing the same game on any scale. All you need to do is change the way you view debt, investment, and risk. And if something resonated with you today, if any of these ideas lit a spark, remember, it's not the amount you have, it's the strategy you use.